Many traders lost their money in this trade. Let me explain you why in the video, and be sure to watch it, because once you learn the lesson from this trade, you will not do it yourself and your trading account will benefit a lot. So without further ado, let's go back to the beginning of the trade. So today we are looking at the British pound and US dollar on the 5 minutes time frame. And it's really interesting what's going on right here. So what happened recently is that we have kind of a sideways movement. Well, the general view is that we are in a downtrend, but recently we had a sideways movement and then an impulse to the upside. But as you can see, well, we are using two indicators, the Breakout Pivotal Bars and the Sentiment Index. By the way, if you're interested, you can try them for free yourself by visiting the link in the description down below. So what happened here is that we have an upward movement, an impulsive movement, but shortly after it becomes red. So this is it. The price moves to the upside, but the candles are red, and the candles, of course, are the color of the candles is set by the Breakout Pivotal Bars. And if you have an uptrend with the red candle, is not a good indication. Usually you have an uptrend with a green candle and a downtrend with the red candle. The blue candles are indecision candles, so they could mean either green, so bullish, or bearish red. So it depends on the situation. You need to pay a closer attention to them, but typically they just follow what's before. So it's a red candle. If the previous candle is a red, it should be interpreted as a green candle, so a bullish candle if the previous candle was a green bullish. But the point here is that the price went up with red candles, and at the same time the sentiment index, which popped right here, then started to trend down. So this was a great indication that the upward movement was not sustained by anything, and the price would eventually fall, and it went down. Right now what we have is that we have a consolidation which was just broken. So let me draw this for you. So we have an impulse here, so the price goes down quite rapidly, then it takes some time moving around, kind of sideways, a little bit of retracement, and then what we are expecting is another impulsive movement. So what I'm going to do is to draw another impulse like this one, okay, the same length, and I'm projecting into the downside. So well, of course we have a setup because we have a breakdown with the red candle, and also we have a breakdown of the sentiment index. So the sentiment index, the bearish sentiment index, was actually trending up, but now it broke down. So it means that the bearish sentiment index is improving. So there is more bearish sentiment which is coming into the market on this pair. So the breakdown is absolutely valid, and I'm placing my order. So I'm selling, I'm entering in this trade right here. So I'll stay pretty close. Let's see what happens. The target is right here, okay, around this level here. I want to have a risk reward at least a 2. Right now it's a 2.5. Let's see if we can play a little bit more with the stop loss, because of course, yeah, we can set it here. Of course, we always need to give price some room to move around. because for instance the price might go down a little bit and then go up a little bit and then make the final impulse to the downside. When we have this kind of price action, there is a very high chance that the price will eventually hit the target, especially considering our setup. My setup, which is made up by the breakout pivotal bars with breaking down with a red candle and the sentiment index breaking down at the same time. So there is a very high chance that we will get to the target. But of course, we always give the price some room to go in the opposite direction. And right now the risk reward in this trade is about 2, which is my minimum. If it is below 2, I'm not going to get the trade, because I want to have at least 2 times the opportunity to lose the next 2 trades in regard to this one. So if I take this trade and I win the trade, I will have the opportunity to lose the next 2 trades straight and still be profitable. This is what means the risk reward to 2. So let's see what happens. So this is when most beginner traders get scared, because the price went straight down almost halfway into the target, but then reversed. And now we have a green candle, which is okay. We take it for what it is. But most importantly, it's within our stop loss. And most beginner traders would get scared. They would get scared because the price is coming towards your stop loss. You see your trading account, which is red, the trade is red, and you get scared. You start to question whether your analysis was correct or not, and you start to question whether you should accept a small loss and close the trade now. But the reality is that it's just that they get emotional, and when you get emotional, you should not trade, or you should either stay out of the market, or you should forget about your trade. So you can just place your trade, do your analysis. If the analysis, you believe the analysis is correct, you place the trade. You check that the trade is starts, and then you forget about it. You have your stop loss, you have your take profit, and that's it. If instead you are an advanced or pro trader, well, this kind of situation is totally something regular. So you just don't care about what the price is going to do now, what it's going to do in an hour, in 2 hours, in whatever. The price can move whatever it wants, whenever it wants. The point here is that we have a clear level of stop and a clear level of target. The price is moving within our levels, and the fact that it is right now within the stop loss, it just doesn't bother me. It's okay, it can do whatever it wants. I still believe that the analysis is correct. First of all, because it was technically correct, and second, because it happens every day. This kind of setup happens every day in the markets, and I trade it consistently over, I don't know, many years, and it's always the same. So when you build the confidence that the setup is correct, that the setup will go to target, it might happen, and it happens, that once in a while, 1 trade out of 10 maybe, it goes to the stop loss. It reaches the stop loss, so you get a loss. But it's okay, as long as you have tested and consistently checked that it goes to target. So you are confident in your setup, and this is the kind of situation I am in. So I keep the trade open, and let's see what happens. Okay, I'm laughing. I'm seriously laughing. Not because I'm happy that we have reached the target with a 2x return, but because I'm thinking of all the traders that got out here. I mean, how many traders got scared here at this level into their stop loss level, and they prefer to take a loss instead of systematically managing their trade. I mean, they accepted the loss even though their analysis was correct. They accepted the loss instead of letting the trade go because their analysis was correct. You should always remember that you must manage a trade like an algorithm. If you take the trade, you believe it is correct, just let it go. And what happened is that we got a 2x profit, but many traders got out here and they took a loss. So don't do that. So I hope you guys enjoyed the video. If you did, make sure to like it and subscribe if you didn't already. If you have any question, feel free to ask in the comments down below, and I'll see you guys in the next video.